continues to be so domestically focused, and little regard is paid to the external effects of QE2. The other big question, which hasn't been mentioned at all, is the future of the euro, which for many people seemed to be a rival to the dollar, and which has been plunged into a profound crisis in the wake of the financial upheaval. And on these two issues, I think it's far from clear. My own instinct is that the dollar's future, its days as a reserve currency or as the sole reserve currency, are numbered, and that if we look ahead 10, 20 years, it will simply be a less important part of central bank reserves. As for the euro, I think it's far from clear that it is out of trouble, and indeed it becomes easier and easier with every passing week to imagine a fundamental breakdown of the system because of structural problems that can't be overcome inside a single currency regime.
Now, let's talk about the euro, actually, because it was one of the big talking points here in Switzerland. Will at least one nation leave the euro area? Well, we had a poll earlier in the week, and a recent Bloomberg poll of global investors said that 59% of respondents see that happening by 2016. Around 10% think that the exit will come even sooner, within the next 12 months, and less than a quarter are confident that the eurozone will remain intact. Well, global investors also see sovereign defaults on the horizon. 3/4 say that Greece won't be able to repay bondholders in full, and about half think that Portugal and Ireland will also follow suit. Grim readings. Do you agree, or is it just investors being scared? Stanley?
Well, I don't think that's the right question. I'm glad you asked it. But the question is, will the euro as the currency of most of Europe survive? And whether one or two peripheral countries leave is very interesting and will provide a good precedent for the future, instructing countries as to how to behave well. I very much doubt that the euro will not be a major currency 10 years from now or 20 years from now. I think the bloc has passed the point of maximum tension and is probably heading, I wouldn't say to a safe harbor, but to less stormy seas.
Minister Rostovsky, you're watching this, of course, very closely because you're probably the closest amongst the panel that is, in the Eurozone. Are you concerned about the fact that we haven't really been able to have the silver bullet kind of package to stop all the speculation?
Well, it's interesting that I'm sitting next to the governor of the Canadian Central Bank, because when I think about the euro, I often feel like Canadians often say about the United States, it's like being in bed with a whale. And we're obviously outside the euro, but what the euro does or what happens to the euro has that kind of impact on us that what happens in the United States has on Canada. I think a good way to think about this is to say to ourselves, how would 2008 and 2009 have looked had we not had the euro and had we had an EMS instead? And if we think about that, we realize what unbelievable tensions there would have been within Europe. The massive realignments of currencies, between the major countries, that very probably would have happened. The huge capital flows, the very, very powerful disruption that could have translated into massive financial sector costs. And if you realize how much Europe, even those countries which are outside the Eurozone like Poland, have gained from there being a euro, you will understand how much the European countries, particularly those inside the euro but not only, are willing to do to maintain the euro. And, we came through 2009, 2010 thanks to the euro. We've now got the hangover from a successful navigation through that crisis. And it's really a matter of, it's a bit of a tussle over how the costs of that successful passage are going to be distributed. And in the end, we'll find a way of distributing.
With all due respect, Minister, you seem to be contradicting yourself, because earlier in this debate you were a great proponent of exchange rate flexibility as the solution to the problem of global imbalances. Well, those countries that lost exchange rate flexibility by joining the euro have paid the heaviest price of any countries practically in the world economy. Take a trip to Ireland, where people in jobs like mine have just had a 30% pay cut inflicted on them as part of the austerity package imposed by the Irish government in the wake of this crisis. I think from the Irish point of view, from the Portuguese point of view, from the Greek point of view, view, being outside the euro in a flexible exchange rate mechanism would have been far preferable. They could simply have devalued in the way that you earlier advocated and avoided these appalling, crunching austerity budgets.
But the issue is not, and I think I'm going back to what Stan said, whether it would have been better for one or two peripheral countries. And I think Greece is a case apart, because Greece has obviously had much bigger fiscal problems than the others. But the issue is not whether a particular country would have been better off having been outside the euro. The question is, are you better off leaving the euro now? Let's assume that Ireland made a mistake joining the euro. Is it better off leaving the euro now, given the kind of public sector debt it has, the kind of private sector bank debt it has? And that's one issue. And the other issue is, will the euro itself in any significant way and in its core break up? And that, I think, there is absolutely no possibility, because of the huge benefits that we've had over 2009, 2010 from having the euro. And those are benefits for peripherals. I mean, you might say, well, you know, a country like Ireland, given the existence of the euro, might have been better off outside it. But compare that to the situation where there was no euro at all, Ireland probably would have been even worse off.
I think that's high.
And I think that's actually very likely. And I think we disagree fundamentally.
Yes, I think we do.
But nevertheless, Ireland is in the euro now. Would it make sense for them to leave under present circumstances? I can't imagine it.
Well, that's a different question,
it's a passionate debate amongst you two, but I wanted to ask actually, how do you feel, Raimon? And it's, you know, on the other side of the Atlantic, are you as passionate and get as riled up as these two gentlemen?
I think I share the view of the finance minister that we see the euro holding together. We see that it's a committed to structure. We see that the power of it actually is what happened. I mean, the power. And as I look at the United States, you know, California is, I don't know, the sixth largest economy. But when we went to fix the liquidity and fix it, one authority could talk and fix it. And that's a little bit what people long for, is to how to have the shock and awe, or whatever you call it, to put it behind you. I think the euro provides at least a vehicle of which they could go to work. And so we see it. You know, we see it going forward, and we see that it's been through its troubles. And so that's the view of our experts that study it and think about it and how we position a company. But it's going to have its pluses and minuses on given days, the two colleagues were arguing about. But we think it's fundamentally there. It's survived a major test, obviously.
Well, I was trying to think while we were talking about Ireland and how you do counterfactuals. And the case of Iceland came to mind. There's a country which had a very similar problem, namely a banking sector which got much too big. I would guess if we didn't have the Iceland example, we'd say that the Irish banking system could grow only because it was in the Eurozone. It wasn't true. It happened to other countries, and that was at the core of the Irish problem. And I don't think, Neil, that there are easy devaluations in these circumstances. When you said, oh, well, they could just devalue, I think when you have a big banking sector problem, just devaluing is also a big mess.
I think one of the things that you bring up is the banking sector size relative to the economy. It makes the problem we all faced very different by country. In the U.S., 60% of the financial assets are not in the banking system. And in the U.S. banking system, the size of the economy is, 30% or something like that. And so it's a much different struggle than Iceland or Ireland, when you have your banks have gone out in the world and accumulated a bunch of activities, and you're dealing with them. So I think that is a different issue, but it's an issue which is in the background of how you're going to handle your fiscal policy and stuff. And will countries in the future, having learned what they learned, allow their banking systems to reflect the world or their own citizenry in size and scale and scope? That's not the subject of debate in currency wars. That's called capital wars. But
I think we agree that the euro will survive, and I don't want to give the impression that I think it won't. I think it will survive, because I think particularly Germany, the core country, has too much to lose from its breaking up. The key question is whether it survives with a low-growth economy or a high-growth economy. And my fear is that the way things are presently set up, with constant divergence in unit labour costs, it will survive, but in a low-growth Europe, in which the periphery will fare especially badly in an almost permanent deflationary situation.
Minister Şimşek, and then we'll come to you.
I think, yes, euro will survive, but Germans will have to pay for it. There's a big cost associated with that, assuming that one or two of those countries fail and ultimately end up restructuring. German and French banks will pay for it. So there is a cost associated with that. Secondly, I think what we have noticed is that prior to the crisis, some of these countries were not penalized by the markets for irresponsible fiscal policies. So the risk premia, let's say, that was incorporated in some of these countries' spreads or yields certainly were substantially lower because of euro. So these countries have benefited tremendously from being in eurozone. Nobody would probably want to walk out of it. And euro, yes, I agree. There is a political commitment, and it will survive. But I think ultimately, a few years down the road, a couple of years down the road, when it becomes clear that the fiscal adjustment is too big for some of these countries to deliver, ultimately some countries will have to pay for it.
Mark Carney?
Just very quickly, I'll pick up on both those points. I agree with Neil. This is a question of unit labor costs and competitiveness. Ultimately, it's a question of growth. The question of fiscal sustainability in the peripheral economies is a question of growth. And the scale of the adjustment that's going to be necessary to reestablish that internal competitiveness is considerable. It is considerable. So on top of that, you have banking sector issues and a fiscal overhang. But the underlying competitiveness of these economies within Europe is very challenged. So there needs to be big gains. There needs to be effective deflation in unit labor costs. You can drive it through productivity, or you can drive it on the price level. And just to bring it back to where we started, this is what we have to avoid on a global scale, which we lock ourselves into one system. So that's the only adjustment where you have to have effectively deflation in certain economies in order to re-equilibrate.
We're going to take a comment from Mr. Rostovsky, and then I'm going to throw questions to the floor. So,
just on that, I think what we've had for the first time now, but after all, the Eurozone crisis has only lasted a year. Let's not overstate it. But at the last ECOFIN, Olli Rehn presented the first growth report that the European Commission has presented. And we're now going to start looking, and I can say this as the presidency of the European Union in the next half of this, the second half of this year, we are going to have to start looking at European legislation in a completely different way from the way we have. We've tended to look, in particular councils, the Labour Council, the Environment Council, and simply say, is this a good thing? And we've never looked at costs. And we're going to have to change that. Countries are going to have to make themselves more competitive through structural reform. It's the first time that we hear the word structural reform in EU documents stated seriously. And I think that's a breakthrough. But we're also going to have to do it at European Union level. Completely different approach to laws that increase costs for the public sector and increase costs for the private sector. And certainly the Polish presidency is intent and determined to take a lead on changing that attitude.
do we have a question from the floor? It'd be great to hear from someone about, for example, whether Germany is prepared and for how long to pay it. Gentlemen.
My name is Mickey Pant. I work for Young Brands. Question for Mr. Moynihan, which is, how do you evaluate the prospects of the U.S. housing market for 2011, and how do you evaluate the risk of your portfolio?
The second part I didn't hear.
How do you evaluate the risk of your current portfolio with the large mortgages that you hold?
I didn't know this was an earnings call. If you see what's going on in the U.S. is our company would reflect the broad economy because of the size and scale in what we do, is that you've seen charge-offs come down for 7 quarters in a row, delinquencies come down, yet we still have serious unemployment. And people could say, how could that be true? And the reason why is we have sustained unemployment. So a person became unemployed a year ago, they're still on benefits, and we have to sustain those benefits from a human safety net standpoint. Doesn't not pay us twice. They quit paying us 12 months ago. And so as this has gone on, you're seeing a delinkage from unemployment levels and credit quality for consumers in the United States, which is confusing to people because it used to always be a correlation. So that the portfolios are healing across the industry. Housing is a long tail process just because the process of moving housing, which is a human element of huge dislocation in the United States, we've never gone through it. Housing's always gone up, it's gone down for a year or two and then come back. And so we're dealing with this dislocation for several million homeowners across the country that we're going to have to move from home ownership to a different style of housing. And the issue that we have to focus on is good housing for the people as opposed to a house that doesn't have any equity in it today. And so we're working that process. It's been, process-wise, it's been messed up. It'll take a 12, 18, 24 months to move through that process. Meanwhile, there's this big belief in the overhang of the housing market. There's no one that does not know that that is out there. and houses sell. As soon as we actually take possession of a house, it sells within 60 days. So the housing market is getting there, but it's going to bump along the bottom, and it's not going to drive the U.S. economy at all. And it's been a fundamental driver since the Second World War forward to the U.S. economy. And that reality really goes back to here. We talk about the questions about how you compete in the worldwide stage at the euro level. You just take out Europe, put in the United States, it's the same questions. And I think that's the long-term reality we face is housing can't be as big a part of the economy, but it's healed, it's getting better, it's bumping along the bottom, but it's going to take 12, 18, 24 months to work through the foreclosure issues and get through them. We've all restarted, but it's a much slower process now.
Stanley Fischer, I actually wanted to ask you something about the reserve currency. If we are going to move away from the dollar, what can replace it?
Well, I'm more optimistic about the euro gaining strength as a potential reserve currency. Still think the dollar will be the dominant reserve currency for a long time. Euro will catch up, and we ourselves are diversifying to currencies which we never would have put in the reserves before, including see an Australian banker sitting in front, Australian dollar and so forth. And I think people will diversify their reserves, and then a long way down the road as China's capital markets improve, and possibly as India's economy catches up with China's, we'll see major Asian currencies becoming reserve currencies as well. I think we will not have a more or less single, we never had a single reserve currency, and we'll probably have more than we've had in the past.
Minister Şimşek, and then I'll take a question if someone wants it on the floor. Do you think that we need to find another reserve currency?
Well, I mean, I think if U.S. continues the way it is in the current environment, certainly countries will look for alternatives, because you can't print so much money and expect no consequences. So that's clearly the case. I agree with Governor Fischer that ultimately the center of gravity is shifting towards the East. China, India, right now, obviously they're not visible at all in terms of reserve currency, but certainly 10 years from now, it could be a very different landscape. And I do agree that ultimately euro is going to probably remain an important reserve currency. But I think many countries are now looking, to see what sort of fallout will be in terms of their reserves. Obviously, China will probably suffer the most, considering, even though they don't disclose how much of their, FX reserves are in U.S. dollar terms, but most people tend to think that the majority is in dollar terms.
Let me say two things here. I broadly agree with Stan, as always, that over time there will be more of a multipolar system. Other currencies will play a central role in reserves. But my basic point is, the fundamental question isn't about the reserve currency. It's not what is the reserve currency. It's the adjustment mechanism of the system. And if countries persistently intervene against whatever the reserve currency is, frustrate adjustment of surplus countries running current account surpluses, persistently intervene, the system doesn't work well. And ultimately you end up getting the same adjustment in real exchange rates through generalized wages and prices in all the other economies. And that's a bad way to do it. And so while the reserve currency will solve itself, countries will earn their way in or fail their way out of being reserve currencies. Ultimately, it's about a shared commitment to a system.
Reserve currencies have a way of dying slowly, and that's the lesson of the British experience. Remember, sterling was the dominant currency in the world until the Great Depression, and its death began in 31 and wasn't really consummated until 76, which is really quite a long time. And there's a reason for that. It's quite hard for these things to change overnight. But what were the reasons for Britain's decline as a reserve currency nation? One, slow growth after the war. Two, excessive debt. And in particular, three, excessive external debt. Now, these three things we see, potentially at least in the United States. Unless the United States, this goes back to the beginning of our conversation, really sees a pickup in growth, it starts to look an awful lot like post-war Britain, saddled with a very large debt, with an underperforming economy and a lot of external debt. And that's why over the long run, I think the dollar is likely to slide and lose its preeminent position that it currently enjoys today. The other really interesting point which hasn't come up is the importance of commodities. We're not going to go back to the gold standard anytime soon, but the currencies that look strong to international investors, often the currencies which have some serious hard commodities behind them. Hence the appeal of Australia, and it must be said also the Canadian currency, once thought of as weak and now one of the strong men of the international currency scene, Mark.
Thanks, Neil. Let's move right along.
No reaction?
I'll just let it slide. Yeah.
One of the criticisms, actually, that we've heard over the last couple of weeks and also here in Davos is that we don't really have the proper forum to talk about currencies. Some say the G20 is just too many countries, the G7 is too little countries. Do we need to find something in the middle?
I think the notion that it's a forum is remote from what the real problem is. Problem is differences of interests and the fact that people don't want to enter the agreement, which is obvious, which is some Chinese appreciation against the dollar and other currencies going with it. This has been discussed in the IMF, it's been discussed in the G20, it's been discussed everywhere. The underlying problem is an underlying conflict of interests and not a lack of a place to do it.
It's always been the case.
And Mr. Schwab would have volunteered gladly if all what was needed was a forum.
President Sarkozy, though, under the G20 presidency, seems to want to push the currency debate much more along than other previous presidencies.
We welcome President Sarkozy's initiative. The system is not functioning well. That's clear. It's clear by this program. It's clear by the comments made. And it's important that we have a shared understanding of how the system should work. I don't know that we necessarily need a special forum. I don't know that we have to go behind closed doors and work that out. It needs to actually be, we have a shared understanding under the Articles Agreement of the IMF. They're not being honored. They're honored only in the breach. And I think it probably does need to be refounded, and we'd like to use the G20 to do that, if possible.
All right, we have a question on the front row there.
Hi, it's Yu Ching from China Business News. Panel talk about the reserve currency. I'm just wondering what's renminbi's future in this regard? Thank you.
Is it a question for anyone specific, or should I pick?
You pick.
You pick.
Great. Minister Rostovsky.
I think I'm the least well placed to answer that question. I've got quite enough on my plate worrying about the euro. So
is this an uncomfortable?
No, I'll take a first stab at it, and then Stan will clean up. The renminbi over time should have a role as a reserve currency, but what's required for that to happen will solve most of the issues that we're talking about